Here we are with our November market update. It's got to be said there's a slight stall in the market nationally with the mini budget, disruption in energy supplies and also job changes happening at Downing Street. People are concerned about the cost of energy and we're seeing this creep into buying decisions. According to a recent home buying survey, over 51% of home buyers would consider new homes and 17% are only looking at brand new homes. 2/3 of those contemplating a new home purchase said they're attracted by energy efficiency and low running costs of the new builds. In 2017, we set up our Land and New Homes department, which means that we're very active across a number of areas, from single plots all the way up to larger developments. We've got plenty on the market at the moment and more to come in 2023. So get in touch if you're looking or if you've got land for development. Our market roundup. Looking at the figures to the end of July from Land Registry, we're seeing a post-pandemic normal market. In Worcestershire, there's been 38% less sales versus the previous 12 months. Worcester and Malvern are only 36% down and Droitwich only 37% down. Average prices are up over the last 12 months, however. Malvern's now up by 9% with an average of 290,500, Droitwich up by 4% at 273,500 and Worcester up by 6% at 237,500. Over the last 5 years, prices in Malvern have increased by 26%, Droitwich by 18% and Worcester by 22%. Lettings, again due to short supply, there's increase in prices in the rental market, up 7% in total in Worcestershire over the last 12 months, and it's hard to save a deposit when rents are increasing too. Average rents are now £781 in Worcester, £722 in Droitwich and a massive £869 per calendar month in Malvern. They've seen a rise of 18% in the last 12 months. If you've watched a few of these or read our market updates, we talk about the national amount of sales that go through, and an average month of completions is around 100,000 per month. In August, close to 105,000 took place. That's the best August since 2007. Over the 3 months, June through to August, there are actually 310,000 sales that completed. That's 4.2% down on the previous 3 months. Perhaps it's a sign that the affordability with increasing interest rates is having a small impact. There were 74,000 mortgages approved in August, which was 11.1% up on a year ago. And year to date, approvals are 3.1% higher than 2015 through to 2019 average. Buyer demand in September remained 20% higher over that period also, from 2015 through to 2019. We compare back to that time because that's what was probably a normal market instead of the last year, which was special for a number of reasons. In July, properties were selling in 33 days on average, but still taking 136 days to complete. As less transactions may be seen as a result of the rising interest rates, we expect that the days on the market could increase slightly. But with more choice coming onto the market, it may well be that the chains that are currently incomplete, over 10% of them, get to find their next move, and therefore the 136 days gets reduced significantly. That's the hope anyway. On to the economy. By the time we edit this and share it, the info could well be out of date. We found that's happened a couple of times already. The government's mini budget created huge uncertainty in the global markets, so a number of changes came in, including U-turns and sackings. Bank of England will have a part to play in stabilising the money markets. Some are concerned that interest rates will now rise more than we predicted. But let's remain positive. The next Bank of England rate review will take place in November, so we'll know more then. The last review saw a rise of 0.5%, which was lower than the predicted 0.75. We now see the base rate of interest at 2.25, with inflation currently at 9.9. New figures indicate that the economy remains 0.2% smaller than before the pandemic. It grew by 0.2 in the second quarter of 2022, with the results of the third quarter still to be shared. Whilst we're filming this, they're still to be shared anyway. So there we are. Bricks and mortar, still a very strong investment. And for those that are thinking of buying an additional property, we have seen more stock come into the market, so some choice for you. There's clearly a demand in the private rental sector. Last month, we had over 600 inquiries for just 14 properties to let in Worcester. Our efforts obviously are to keep you informed of the market, and we'll continue to do that in your area. We don't want national headlines to distract you from what's actually going on. And if you are thinking of getting yourself moved into a larger home or downsizing to something smaller, we'd love to hear from you. Enjoy your month and get in touch if we can help in any way.